Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on global growth or global gamble, what the IMF is saying about 2025. Last week, the International Monetary Fund, IMF, published its World Economic Outlook report tagged Tenuous Resilience Amid Persistent Uncertainty, and the report is published about 4 times a year. The IMF was set up in 1994 and governed by and accountable to 190 countries with an objective to build a framework for economic cooperation. The IMF has lent about $1 trillion to its member countries. From a global perspective, the report indicates that the global economy has shown resilience. However, current growth is primarily driven by temporary factors such as trade and investment front-loading related to tariffs rather than fundamental economic growth. Global growth is projected to be 3% in 2025 and 3.1% in 2026, which is slightly above previous forecasts. Nevertheless, these figures remain below the pre-pandemic average of 3.7%, indicating a slow recovery momentum. Additionally, global inflation is expected to decrease to 4.2% in 2025 and 3.6% in 2026, with significant variations among different countries. Key global forces in play. 1. Trade policy uncertainty. Temporary suspension of U.S. tariffs has helped financial markets recover, but the expiration of these pauses by August 1st could renew disruptions. 2. Weaker dollar and financial easing. Surprisingly, the US dollar has depreciated, easing financial conditions for emerging markets. 3. Geopolitical risks. Recent Middle East tensions briefly pushed up oil prices, but supply remains stable for now. Despite some positive surprises, downside risks remain elevated, including 1. A possible resumption of high tariffs, especially if trade negotiations fail. 2. Geopolitical shocks in regions like the Middle East or Ukraine could disrupt supply chains. 3. Fiscal vulnerabilities, especially in countries like the US, Brazil, and France, may drive up interest rates. 4. Inventory overhang from trade front-loading may suppress economic activity in the second half of 2025. Highlights by region. United States. Growth upgraded to 1.9% in 2025. The new One Big Beautiful Bill Act, OBBBA, is expected to boost short-term investment. Euro area. Growth of 1% expected in 2025, driven partly by strong Irish pharmaceutical exports. China, revised upwards to 4.8%, supported by export diversification and a weaker currency. India, expected to remain robust at 6.4% in both 2025 and 2026. Sub-Saharan Africa, growth projected at 4.0% in 2025, rising to 4.3% in 2025. Nigeria, growth forecast for 2025 remain at 3.4%, with a further rebound to 3.2% in 2026, reflecting fiscal reforms and stabilization efforts. IMF Policy Recommendations. To ensure sustained recovery, the IMF proposes the following. 1. Avoid the escalation of trade tensions and promote transparent rules based on trade. 2. Strengthening fiscal buffers through targeted reforms and efficient spending. 3. Using monetary policy cautiously, with inflation still above target in some economies. 4. Prioritizing structural reforms in areas like governance, education, innovation, and digitalization to boost productivity. 5. Where needed, international cooperation should be deepened to mitigate spillovers and protect vulnerable economies. Nigeria's outlook. In 2025, Nigeria's economic growth is projected to reach 3.4%. This growth is anticipated to be driven by several factors, including a recovery in oil production, the positive effects of recent exchange rate reforms, and measures aimed at fiscal consolidation. However, the IMF has issued a cautionary note emphasizing the importance of sustained reform efforts. Key challenges such as inflation, revenue shortfalls, and debt-related vulnerabilities must be effectively addressed. While the unification of exchange rates and the removal of fuel subsidies are seen as positive steps, the country will need to prioritize fiscal discipline and enhance productivity to maintain its economic momentum. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed and have a great week. Bye.